back and relax while we give you advice and tips on business matters and matters of the heart for busy executives. And now, Katrina and Edward. Hello, hello, hello. It's Katrina Brittingham, your navigator on your road to success, your business coach, and Dr. The Real Deal Love.
Hello, hello, hello.
Thank you for joining us for another episode. A little late, is had a long day with a client, but we
Mm-hmm.
are here, and so we are so happy to join you on tonight. We are going
Yes.
to finish up the series, Understanding the Numbers, Business, Finance, and Accounting. So awesome. We are so happy to be back here with you. And I am gearing up. Yep, there we go. So we ended off.
Understanding the numbers. Yes.
Yes, this is the culmination. We talked about the different types of finance, how to
Mm-hmm.
finance your business when you're starting up, and even after you're in business for quite some
Yeah.
time. Once you
Mm-hmm.
start up,
Mm-hmm.
yes, you have to watch the finances and understand the numbers. But once you are in business, you still have to understand the numbers. Okay. Even if you have an accountant, you still want to understand the numbers.
That's
Okay.
important.
There are a lot of accountants out there, but a lot of people kind of fall into trouble when
Mm-hmm.
they don't understand the numbers. So please do take the time to learn those or contract me, business consultant. I
Mm.
can help you with all of that.
And
Okay.
and that would be good. Just one thing someone said to me that I thought was interesting. A businessman said to me, he said, "I have an accountant to check my accountant."
Yes.
So that would be good, just to have someone like you to come in and just, check over some things behind, you know, the original accountant. Not to change anything, but just to make sure everything is, on par like it needs to be. Those checks and balances are important.
Those checks and balances, or if you want to learn yourself, so you can check the accountant if you have time to
Mm-hmm.
do so. But it's always good. My one of the things I told you before, I have a lot of business people that are in my family. Growing up, I was blessed to have an uncle and some other family members that actually own their own business. And one thing my uncle always told me, he was like, you might not do everything because you have employees, but you should know how to do everything.
Good
And it
advice.
was so wise to me, even starting my own business, because I have had contractors, I've had employees, and, in the grand scheme of things, people move on. And when they do, I know what they do. So in the interim of finding someone, because sometimes people leave very suddenly. It's
Mm-hmm.
not always a planned event. So having to be able to pick up those reins, yeah, I might not have wanted to do it, but I
Mm-hmm.
knew how to do it.
How to do it. That's right.
So I say that for that things like, oh, I have an accountant. I don't have to check that. It's always kind of good to know how your business operates. Okay.
It is.
Every
Mm-hmm.
position, even if you don't do it. Okay. Many solopreneurs are doing everything. So this way you will know everything. And then once it moves on, just keep yourself afresh with
Mm-hmm.
that. So once you understand the numbers, the these elements are composed in three primary financial statements: your balance sheet, your income statement, and your statement of cash flows. How does the cash flow in and out of your business? Okay, that's the statement of cash flows. Just like that, flow in, flow out, flow in, flow out. Sort of like wax on, wax off.
Mm-hmm.
So the balance sheet is considered a snapshot in time that represents the basic financial status of your company. Okay, that's like the skeleton of
Mm-hmm.
your company. The income statement is a measure of how a business has performed over a specific time period, usually 6 months to a year. It could be every quarter that you decide you want to do it. Um, Honestly, the more frequently you do it, especially in the beginning, you start to build up your chops in that, and you actually know where the business is going. It measures all income less all the expenses to arrive at an amount of profit or loss generated by the business for a period of time. So if you're in business, you have the profit loss statement that's on your Schedule C. That's where you will be getting those numbers from. You will be getting them from your income statement and putting it on your tax form if you don't have an automated system to do that. But you can always compare your income statement to what is flowing into your tax statement just to make sure that they line up and that you're tracking that properly. It will help you with when it comes to taxes and making sure your taxes are clean and clear. Okay. It will make sure that you are even reporting correctly to the IRS, which is important. Okay. Then you have the statement of cash flows. All right. So the income statement will be like the muscle and the meat of your business, and everything like that. And the statement of cash flows is sort of like the blood pumping through, is how it all flows through. Okay. It tracks all income, expenses, and available cash in monthly intervals. It is intended to help business owners plan and avoid cash shortages. So we spoke before about if you take out a business loan, then you would need to pay that money back. So you would know how much you have in available cash to make sure that you are paying your bills and hopefully have some type of cushion. Okay, we did discuss before that generally most businesses take at least 5 years to make income,
Mhm.
or to break even. Okay, so you'll either break even during that time or before that time, and or you'll start to make a profit and see a profit. Okay, I know for my business that's how it was because I spent a lot of money um, in order to run the business because I was bootstrapping the business.
Mhm.
Okay, so I'm gonna stop sharing for a minute because I want to show you a sample of what each form is. So we are going to start with the balance sheet. Okay, so the balance sheet, as we talked about, is an accounting document that shows your working capital, your debt to income ratios, and all of that stuff. So it helps you understand um, what's going on with your business. All right. So as we can see, we have the current assets, your current liabilities, any fixed assets you have, that's property and equipment that you have, less your accumulated depreciation. So that's anything you're depreciating in your business. That could be a printer, that could be uh, a computer, that could be a car. Those things depreciate the longer you have it. Okay.
Mhm.
And so you can break that up in between a number of years, for the cost of that. Okay.
Mhm.
If you have any other liabilities, that's long term debt, any loans, um, retirement costs, if you have that in your business, deferred income taxes, and deferred credits or liabilities. So that's company credit cards, any loans that you have. Um, Deferred income taxes is money that you are taking out from the taxes to pay at the end of the year, if you choose to do every year, or you can pay every quarter.
Mhm.
Whether you are um, a solopreneur, you still want to start trying to see if you can save for your retirement. So any money that you save for your retirement, you want to put that in there. All right. So that is your balance sheet. Once you minus your liabilities from your assets, you will get what your total equity is, and your total liabilities over your equity. Okay.
Hmm.
All right.
Miss Katrina, what
So,
is the rate of depreciation?
actually, I don't know. I know that
Okay.
the IRS kind of puts a number on it,
Okay.
and it depends on one thing I do know, it depends on the cost of the item.
Okay.
So like a computer that's like $1,000, may you might be able to depreciate that over like a couple of years because you're
Hmm.
depreciating until the value goes down to like zero.
Zero.
So, but if
Hmm.
you have something, an equipment that's like $10,000, $100,000, that depreciation time or and ratio will be different.
Hmm. Hmm.
So, um, so they'll give you like a certain amount of time. It might be 5 years. I think 5 years might actually be the max. But as
Hmm.
far as the percentage, I don't know. I always go and use the calculation that the IRS gives me.
Okay.
Yep. Good question though. Let's go to the next one. And the next one is my statement of cash flows. Let's do the income statement first. Okay, so we have the income statement, which will show your revenue minus your operating expenses. So you have the sales, and as you can see here, it is 5 month outlook. So you can do, like I said, 3 months, or you can do 5 months. You can do 6 months, whichever gives your business you the picture of your business financially. That's what you should use. Okay. And then we have any sales discounts that we have. If you had any sales returns, any other revenue, you would just put what that revenue is here. This is a template. And then it has your net sales. From that, you have the cost of goods sold that's subtracted from it. Okay, so you know the cost of goods sold is your inventory, um, marketing, things like that that you paid into getting that product sold.
Hmm.
You subtract that from your net sales. Okay, from there, you have any salaries or wages that were subtracted out. You have depreciation expenses. So to answer your question, if you have that depreciation expense, you can always take it, whatever that expense is, and add it to whatever the cost is. So it doesn't say what it is, it just says depreciation expenses. That could
Hmm.
be one item or it could be 10. Okay. Um, and even if you do your own depreciation expense, always go with the what the IRS says.
Hmm. Hmm.
Because
Yes.
some people are calculated and then the IRS will say, oh, you did not depreciate enough, and you'll have to go with that expense. If you don't, then they're going to come back. Okay. So we have office expenses, that's supplies, um, that's if you have to replace computers from an employee or new hire employee, whatever your rent expenses is, any travel expenses if you travel throughout the year, maintenance costs, and advertising expenses. Okay. Then you get your total operation expenses here. And then you have the income from operations, which you're subtracting from that, which you see is you will end up with a profit or you will end up with a loss. A loss will have the parentheses around it, profit will not. So that's how you
Hmm.
know it is profit. So in the accounting world, the parentheses is a negative amount. Okay. All right. And then we have here finally the statement of cash flows. And we are going to go through that. Any other questions, Dr. Love?
No, I think that was excellent in terms of the cash flow is going to be just so important because I was I just talked with a gentleman the other day and he was talking about his contract with the city,
Mm-hmm.
and he would say, he would get the contract with the city, but the city pays net 30 days, net 60 days, and his
Mhm.
cash flow was just, it was just tight because you have to be able to manage your business until you get accounts receivable. So I think that just that just crossed my mind when you were just talking about cash flow.
Mhm. And that's why you have to understand the numbers. I tell people, even if you have like a big government contract,
Hmm.
also have another contract that is not net 30, net 60, net 90, especially when you're dealing with the city, because even if it is that time, they can push it back, and they're the government. They can.
That's right.
The
They can.
payment
You're right.
time. You also have run into if the government goes on strike, and I know they were thinking about that recently. Because when I
Hmm.
was
Hmm.
back home, they were talking about it and how many areas would be impacted by that.
Impacted by that. Yes.
So you have to kind of um, plan for the worst but expect the best. So, because a lot of people will fall into hard times when they have a net 60 or 90-day contract, or say it was net 30 and you're expecting that income to come in, and they say, wait a minute, we need to add 60 days on
Hmm.
before we pay you. And they do that. And
They do
so
that. They do that.
um, it leaves you at a um, disadvantage cash flow
Hmm.
wise. It's always good to have multiple streams of income. People will
Hmm.
say, "Oh, I can't handle it." Well, yeah, you can because you have employees for that contract. Because trust me, when you get a contract with the government, you have to have the staff to man it. When you get the next contract, get staff to man that. But at least you have income coming in for when you have a shortfall when it comes to a contract, or if you
Hmm.
happen to unexpectedly lose a contract. Then
That's
that
right.
way you are still. It's a whole thing of not putting your eggs all in one basket
Yes.
thing, because if you do, you drop that basket, you risk all of the eggs, and now you have
Hmm.
nothing left over. Um, so that was a good analogy and story. Okay. So the statement of cash flows goes as follows. This is the operating activities that you have. This is cash that you receive from your customers. That includes clients if you have contracts. If you have retail, that's the customers that walk in and out of your door to make purchases. Okay. Cash received for any interest you had, that is investments that you get as far as interest, unless you are extending credit to people.
Hmm.
And some stores do, they generally do it through a bank and it's not actually the store, but interest that accrues on anything that you have that includes interest as far as you getting the interest income, not you paying interest out. I just want to be clear on that. All right. Then you have the cash paid for salaries that is deducted. You have the cash paid for rent or lease if you rent or lease the building. All right. If you've purchased a building or something like that, and you paid for all of it in cash, that would be the cash paid for um, the facility. Okay. If you, I don't see anybody actually mortgaging properties like that, but if you do, then whatever your mortgage payment would be for that time frame, um, then that would be there. All right. So any cash that you paid for any other items that you had to spend for office equipment, things like that, cash provided by operating activities is here. Investing, so see, it says investment, purchase of land. So you might have purchased land or in an office building to go on top of that, and you might be on certain floors and other businesses might be on other floors. So that's how you have that as far as investing. Or you could have just purchased the land and decided that you wanted to build a structure just for your company there. However you decide you want to do it. Any financing activities. Generally, if you buy land and you are cash strapped, you're probably financing it. Um, you have payment of dividends. So if you received any interest on your investments, then that is called they come in and they give you a dividend. Well, you have to, um, pay taxes on that. Okay.
Mm-hmm.
You have the decrease in cash. So that's taking all of um, what you had in your banking account and everything like that for what you had to pay for. This amounts out to $205. Okay. And then you have the decrease in cash. I'm sorry, I already said decrease in cash. The cash that you will have on January 1st, this is what you would have. This is the cash that you has as of December 31st. Okay? This is for the year ending. So apparently, this is the cash that you had after you took out all of your expenses. This is what you propose to have. So something must be coming in January 1st. Okay? Or if you've done this statement of cash flows in January, this will show what you had in there. So something must have come in, some type of payment or something for you to have gone from 192,000 to 397 in January. This could have been the government contract
Hmm.
that they
Finally.
paid. So that is the wrap up. This is the half an hour up to um, the half an hour almost. Do you have any questions, Dr. Love, that you would like to share? Anyone in the audience have any questions? Please let
I
us
have
know.
I have one question. In the back of my mind is a word that I was dealing with in business and I forgot what it meant. Amortization.
Amateurization.
Yes,
And I'm not even sure if I said
amortization.
that right.
Okay,
Amateurization? Think it's that.
close
Hmm.
close enough.
What would you
So,
like to know about it?
what does that mean?
That is a good question. And I'm about to tell you.
Okay, I
Okay.
just remember having a conversation and oh Lord, it's just so much in business. People don't realize all of the words and technologies and like you were just talking about depreciating in
Excuse me.
value. It's like you can only take a certain amount of the value each year, so it's a lot to learn.
Hmm.
I'm saying
Well, see,
entrepreneurs are special people.
we are crazy, but special. Just like depreciation is taking over time for property, amortization is the systemic repayment of a loan over time. So
Okay,
basically, you're
okay.
paying that loan until it goes down to zero, hopefully.
Okay. Yeah, and I know where that came from now on a deal that I did. Yeah, the
Okay.
rate of amortization. Yes. Okay.
Mm-hmm. He doing deals with amortization, y'all. All right. So that was a good question. Anybody else have any questions? Okay. Because and see, it took me a little bit to have the answer. I do have the answer in all of my stuff. Um,
Okay.
I know where to get it. Anybody who says they, even if they're accountant, that they remember all this stuff off the top of their head, they're not telling you the truth. There's so
Hmm.
much
There's so
when it
much.
comes to this
That's right.
and doing it. You even have accountants that, specialize in certain things. So some specialize in taxes, some specialize in doing general accountant, which is the balance sheets and things like that. So they may have some things that's on the top of their head when it comes to that. And you'll have some that say, I don't do tax. I don't do
Hmm.
taxes. So they'll tell you I don't touch that. So um, ask your questions. You can email us. Well, email me. Dr. Love's like, why are you emailing me stuff about accounting? I don't do that. Um, info
I
at
know someone who does though.
ventureready.net.
See that's the thing. You don't have to have all the answers, but you have to know who has them or where to go.
Exactly. And that still makes you an expert.
That's right.
So email me at info at ventureready.net. We do thank you so much for joining us on tonight. So hopefully, if you followed us the last four, because the first week was Dr. Love, but before that we started the finance section.
Yes.
So this should be the third, maybe the fourth. I have to go back and check.
Mm-hmm.
Um, for the understanding the number series. So if you have not seen the other two, you can always go back and watch them. All right, we have been pretty consistent since we started. We only missed one time with a refund because I had the family issue. But if you just go through the videos that I have on the Facebook page or the YouTube page or the LinkedIn page, you will see the series. Okay. So you can go back and watch Understanding the Numbers, and you can always, reach out to us if you have any questions. And I know I said that before, but we do thank you and have a good night.
Good night.
Thank you for joining us for another episode of High Tea with Me. To be a sponsor or a guest, contact us at info@ventureready.net. Thank you again, and we'll see you next time.